that's my initial thought, is I don't think
Yep.
it's quite that bad. But I'm specifically looking at the markets that I'm invested in. I'm invested in higher quality properties in really great markets, A and B class stuff. Those that are in secondary and tertiary markets that people way overpaid for, class C stuff that's also having problems, collecting money, and vacancies ticking up, and, lots of evictions. There's a lot more in that C class and tertiary market space that I think definitely is probably more in the, 10, maybe 20, 25% are savable.
Yeah. So I'll catch up on the conversation because we went for about a half hour, Ryan and I, and
Yeah.
hopefully again I'll talk to their CEO Stuart here in the next couple of weeks. First and foremost, the goal of Nouveau Capital Partners is to, when they say savable, it's they can do a deal structure, bring in capital, redo the debt, whatever it is, and keep some of the LP equity there.
Yes.
Right? That is Nouveau Capital's goal, as I understand it. It was
Yes.
interesting talking to Brian because that is definitely a competitive advantage for Nouveau because the LPs will get something.
Right.
He is telling me that, you know what, Michael, there's also a lot of what he called vulture funds that have
Yes.
zero interest in keeping the LPs in. They're, vulture funds will dump the LPs or the equity in a heartbeat. So
Right.
there is a lot, hundreds and hundreds of millions, probably billions of dollars being raised because people see opportunities here. So when
Yes.
Nouveau Capital says 1 in 5, we got to remember that their goal is to keep some of the LP equity, and that's probably why it's so low, in my opinion.
Right.
So
Right.
that's the first thing.
It may
Uh,
be because they're also saying what's savable and still gives the person coming to the rescue some type of incentive and profit to do the
Less,
deal.
but some,
Because
correct.
if there's no incentive and profits to do the deal, then these groups aren't going to come into the rescue, and then they may have to turn it back
Exactly.
over to the bank. So, and here's the reality: investors have to make money. They're taking on huge risk. And
Yeah.
so, these PE groups, they are out there and they are helping people not have to completely hand the keys over to the bank. But to your point, it's very difficult to do that when there isn't very much equity in the properties anymore. And so, if you had someone that was a really good operator and they've held it for 2 years, but they're mostly through their renovation plan and their value add, then they have created enough equity over their debt that at least they can bring in, a PE to kind of keep their debt service ratio in line, and then have to basically dilute the equity of the limited partners. But at least there's something, and there's still a chance that they hold that asset, they finish their value add, and they can sell it on the other side of, interest rates being high, when cap rates hopefully come back down and values go back up. So that's why they're coming in, because they're trying to find assets that they believe have equity and still have upside on the other side of this. But for those that, didn't do their value add plan, they weren't, enough through it, they may have brought their occupancy way down to vacate units to fix up. Now they can't cover their debt service and they don't have a rentable product. The LPs probably already lost all their equity because the property may not be able to be sold today or
Yep.
rescued for an amount less than the debt. And that's what he's, basically saying when he says the LPs have already lost.
No, absolutely.